Good afternoon, guys. It's Saturday, October 23rd. My name is Dave Coker, and this must be talking about finance. And you know the routine, just what me and my buddies are talking about. There's about 40 of us on a Telegram channel. We talk about finance constantly. Let's see what's going on over the past week. We'll start out by reviewing the S&P 500. We closed about 1.64% up, so not a bad week, considering all the bad news was in and around. And as they used to say, and I'm telling you again, as they used to say, stocks climb a wall of worry. We'll have more to say about this later on because there's some very odd stuff going on in the markets lately. It's really, really weird. And the VIX, well, the VIX actually traded down from 16.2 to 15.4, so that's double plus good, as we say. Oil finished up about 83 a barrel, still climbing. We'll have to see what's going on there. And guys, haven't been around the market since I've been a little kid. I got to say again, this is a classic melt up. We've seen these before. And don't be keeping too much liquidity in cash. I'm pretty much 100% invested right now. I'm going to sell some stocks to buy more gold. I got some gains in my retirement account and I want to buy more gold. So try to buy something. And you guys know what I like. Either property or a good dividend paying stocks are my favorite. The gold is a hedge. And if you think you're a day trader or a swing trader, yeah, sure. Go tell someone who will believe it because I don't. I've done this professionally and you ain't making money 24/7, but when you buy a rental property or a solid dividend paying stock, yep, I'm getting paid now. Are you? I don't think so. It's Saturday night and you shouldn't be messing around with the markets on a Saturday night. But in any case, let's see what else is going on. Now, as I mentioned, guys, stocks climb a wall of worry. That's the old expression. Look at this odd market. So we saw the S&P 500 peak on September 2nd, and it dropped over a period of almost 5 weeks until October 13th, and then it took the S&P 500 6 trading days to hit a new high. Normally, these markets tend to go up slowly, and then we see the opposite. All the gains can get wiped out in a very, very short period of time. Conclusion, this is a very odd market, and I'm still fully invested, although I'm invested in probably different things than you, dividend paying stocks and bullion and things like that. It's just very, very weird. Oh, and guys, once again, anytime you see Coker.me, it's some research that I pushed over to one of my 6 clients who are financial services firms. There's a mix of investment banks and hedge funds in there. And these typically, I give you guys the graphics. I just don't give you the words. There's about, today's pack rather, I should say, went over with about 3,000 words and about 15 different graphics. So, a chart a day keeps financial illiteracy away. What else is going on? This is wild. Look at this. McDonald's in the States, $21 an hour. Run the math. We're talking roughly 43,000 a year. Now, I'm not being disrespectful to anyone working at McDonald's. God bless them. I love when people go out and work. The only reason I got out of poverty growing up incredibly poor was that I got jobs and just kept working, which is why now all I do is work. But this is a lot of money. It's definitely above the median wage. And I don't know where it is. Somebody put it on the Telegram channel. I didn't get a chance to ask her. I probably should have done. I was just totally stunned. I think we were all stunned about the money and thinking maybe, hey, we can get a side hustle here, right? It's entirely possible. Regardless, when we take a look at what's going on in the States, this is really cool. And look at the amount of money people have. Now, why aren't they spending the money? I think about things like that and just think about this for a moment. Why aren't people spending the money? I maintain that people in the States are worried. And because they're worried, they're holding on, they're hoarding cash, they're not spending money. It's still growing. Not as quick as it has been, but it's still growing. They ain't spending money. They're hoarding cash because they're concerned about the future. And that ties in with the consumer confidence surveys. I don't know if I put them here. I definitely pushed them out to my clients, and I showed them at one of the universities I worked for. Really fascinating, guys, when you think about this, that Americans aren't spending money. Who is saving all the money, though? Now, you got to be careful with Mother Jones. I wouldn't reproduce this, except it comes from a guy called Josh Bivens. Yeah, look at this. Look in terms of the income. I'm not impressed, to be honest with you, in terms of the saving rate. It's really fascinating. And of course it goes up because what the hell do you do with the money? If you're making $750,000, how can you spend it? Well, you can't. And when I was working at Deutsche Bank at one point, now don't read into income and savings and things like that, but I was I bought a property in London's East End, incredibly cheap, paid it off. Anyways, long story short, at one point I was saving about 90% of every paycheck because I'm a good saver. And I'm not sure what's going on here now. I would suspect, first of all, I'd say on the left-hand side of the chart, even the people at 200K or under, my God, what are you doing with all that money? You should be able to save more than 1.9% of your money if you're doing 150 to 200. And even the people in the 300, I save more than that now. I'm not doing 300. It's just really, really weird. So whatever you're doing, guys, make sure you save money. It's really important because we know that prices are rising. And inflation's in all the news, and I follow FinTwit, MoneyTwit, and CryptoTwit. They're all distinct subsets of Twitter. I follow them very closely, guys. My gosh, I've got a bot, and we're seeing the word hyperinflation pop up a great deal on MoneyTwit. It's absolutely amazing. Are we really in a hyperinflationary environment? Well, it's all relative, isn't it? So here I've got 4 different periods, 5 actually if you include the current term, of U.S. inflation. And you can see 64 to 69, 3.1, 70 to 84, 7.4. But that actually masks that we had 2 periods when inflation was really, really uncomfortable, right? Almost 12.5% and almost 15%, corresponding with 75 and 80. And guys, I'm ancient. I'm really old. I grew up in that era. I remember when inflation was that high, particularly in the 1980 or so. Why do I remember it? Well, I've been saving a lot, as you know, over time. And the banks back then, my gosh, they were paying 18%. It's wild. Yeah, you didn't really end up with 18% at the end of the day because inflation was 15%. And that brings us to real interest rates and things like that. But we won't talk about that so much. In any case, 85 to 2000, 3.2, 2001 to 2020. Wow, this is such a great time. Look at that. Inflation across the horizon, 2.1%. And now we're running 5.4. I maintain that inflation is much, much higher than what they say when they talk about CPI. But still, part of the reason people are feeling the pain is, well, they don't save enough money. But aside from that, again, we're seeing it bounce off a period when it was really, really low. Is it going to stabilize at 5.4? I don't think so, guys. I really don't. Look at this, for instance. Here we go. We've got gas prices globally. And I got this off the wonderful website, Global Petrol Prices, some research. And it's really fascinating. Look at the U.S. right in the middle, $3.16.7. We're talking about price per gallon for a specific grade of gas. And you can see there's some countries, mostly, or in fact, all of them are developing nations, where gas is cheaper than the United States. Hello, Venezuela. 15 cents a gallon? I don't know. Can you really afford a car? Inflation's like out of control there. Iran, yeah, wonderful. You guys get it really cheap. But look at the other end of the distribution. Hong Kong, God bless those Chinese. How do they deal with this? 9.82 a gallon. I guess it's like London. They just don't drive too much, right? Netherlands, Norway, Central African Republic, and Denmark, all higher than the United States and actually over 100% higher. Now, when we take a look at inflation, guys, and again, it's in the news a lot, so we're going to be chatting about it. What does it mean when we talk about a 5.4% CPI rate? Well, there's different factors that go in, and in fact, there's about 200 factors, and for each factor, there's about 400 different items. I'm not making this up. It's the most incredible thing. And when they put it all together, guys, you can see that U.S. inflation running at 5.4 incorporates the prices, the changing prices of roughly 80,000 items. There are some factors that lower CPI. They're all put in green. And then there's some factors that cause CPI to go up. New cars, really amazing. Used cars, absolutely incredible. Gasoline, there we go. And meat, fish, and eggs. I guess if you're one of these people that just wants to eat veggies and stay home, not really do much, you might be okay. But aside from that, inflation's really eating you up and beating you alive. And guys, this is a really cool one because a lot of people view the United States as being the best market to invest in. Well, speaking to someone who owns property in 3 different countries, and I tend to have an oddball habit of when I go to work in a country, I buy a property. And then when I leave the country, I don't sell the property or rent it out, right? And regardless, I've got this view towards tangible, real physical assets, which is a little bit different. And I've also got a very open mentality, so I'm always looking for different places to invest. And a lot of my countrymen, God bless them, solid patriots all, they tend to say America's the best place to invest. Well, yeah, maybe. Let's take a look at the S&P 500. Let's look at the closest thing we can get to a Russian index. We're looking at Van Eyck's Russian index. It's an ETF, and my gosh, it stomps the S&P 500 over the past 5 years. Yeah, a little bit of selective time period, but what I'm trying to communicate here is when you're investing, you should always have an open mind. And remember, I started out by talking about trading. I do a little bit of trading from now and then. I just don't put the bulk of my wealth in it. I prefer to own dividend paying or tangible real physical assets that pay me cash flow. So whether we're talking about dividend paying stocks or rental property. And I mentioned to you guys, I shared that I've got a great amount of my retirement capital. Used to be 67%, but the stocks in that portfolio, my retirement account, are doing really well. Now it's down to a little bit north of 65%. So I'm going to sell some stocks and increase the gold holding. Why am I doing that? Well, gold, I've got a long thing going on with gold for many decades. And I do think gold, and many people on Wall Street who I respect very much, or some people I should say, who I respect very much. And David Hunter, I'm thinking of you. Yeah, I think gold is going to increase sharply. And gold is an asset that carries a negative yield. You have to pay for storage and insurance, but hey, I'm going to sell an energy company that I've got that's done really well. I'm going to get more gold, and I'll probably end up closer to 70% because this market has got me really weirded out. There's a lot of strange things going on right now. And it's not that you can't make money. You definitely have to invest to make money, but you do have to protect your wealth. And that's why the good Lord gave us gold. And we'll talk next week about why he or she gave us Bitcoin, because we're doing really well there as also. All right, guys, have a wonderful week. Hope everything goes well for you. It's going to be really profitable. Looks like a good week coming up. And once again, we're coming into Q4. Earnings season looks like it's off to a really good start. So keep the faith. Just protect your wealth. Buy some stuff that'll benefit if there is a stock market crash, which a lot of people are starting to talk about now. Don't worry about it, though. All right, take care, guys.